Hey, what's going on, beautiful people? Listen, it's Money Mondays. Welcome back. Listen, it was a whole slew of topics last week, and we're going to cover them right now here in this time, in this space. Like, love it, share it, tell a friend to tell a friend about it. I think you're going to be more empowered with your finances, and also what we care about the most, right, is the stock market, like really breaking that down. What to invest in and the things you should be looking out for, because the money's in the news, right? The money is in the news. Momentum investing is at an all-time high. They used to say that fundamental analysis was the way to do things, but I truly believe at this moment in time, momentum investing is it. Like, what's going on in the news is driving stock prices. If you heard about Ozempic, Novo Nordics makes Ozempic, and you can see the stock price is a direct result of what's going on in society, right? Momentum investing, right? So, without further ado, let's get it. So, first order of business: Chipotle board approves of the 50-1 stock split. That's huge, guys. Like 50-1 stock split. So, this has to be approved. They're gonna have a shareholder meeting June 18th, and if it's approved, after the trading day of June 25th is gonna go into effect, and so it'll be June 26th that happens, and this is monumental, because what happens with a stock split is the price. The market cap is the same, so the value of the company stays the same, but what happens is it makes it more affordable for people that might not have been able to afford the stock previously. So we're talking about the stock was hovering around as the time of this recording, almost around $3,000, right? So you're talking about bringing the price down significantly, from like just significantly, because it's a 50-1 stock split. So it's very helpful, like around almost $60 we're talking about bringing the price down to. So it's very helpful to those that want to get in the position, and we know that Chipotle's are not going anywhere. It's an American staple company, and if that tickles your fancy, come if the board approves it, come June 26th, buy some shares. Also in the news, we have luxury stocks fall, right? This is interesting because they was talking about the other day that Gucci, the owner of Gucci, Kering, has warned of sales drop, right? Like that's interesting. And guess what, guys? It's not, see, a lot of times we have been taught that, we are, I'm talking about, when I say we, I'm talking about black people, the reason why Gucci and all these people are making so much money. But it really turns out that they're dropping sales in Asia. China, more specifically, is the reason why, is the reason for the drop off in the luxury goods space. So Gucci is taking a hit mainly because of because of the Asians are not buying their products. The Chinese are not buying. So it's not what we've been taught. You know what I mean? We're not their biggest consumer. It's actually the Asian population. And for whatever reason they've scaled back. So it's been a big drop in luxury goods. But I don't look to see the price go down and in their products. Usually luxury doesn't go on sale. We know how that goes. Oh, I got a good piece of news for all those who love shopping on Temu. Their parent company, PDD. That's their parent company. That's the ticker symbol on the stock exchange. PDD, right? They're killing it. They had a earnings report and they blew the numbers out the water. Their stock price soared, and so Temu was killing it. For the people that's shopping on there, look to invest in it, because right now their parent company is doing very well. They're based out of China-based firm. Temu. Who'd have thought? Now, this was a topic that brought up a lot of feelings and emotions with a lot of people last week. There was a report that said 47% of parents financially support grown children, spending an average of $1,384 per month on their support, right? And I don't know what these parents are that's giving that much money to their adult children. That like their adult children have their own house, their own things, and they're kicking them, and like that's almost a mortgage payment, right? And they're giving them that to help them out. That's pretty noble. That's pretty great if you can do that. I think more parents, we should a lot of us might not have that happen to us, but I think we should strive for that. Like a lot of times we think people are getting to the places and spaces that they are at just off their own merit. But when you pull the curtains back, you'll find that, you know, their parents paid for their college, or so they had no student loan debt, or you'll find out that their parents gave them the money for their down payment of their first house, or you'll find out that the parents may have paid half of their mortgage on their house. Like literally said, take if you owe the bank 400,000, I'm gonna give you 200, you know. And you'll find out these things are what's happening behind the scenes as you was feeling like, dag, wow, how come we working at the same place and they're doing so much more than I am? And it's really the things going on behind the scenes that's really aiding and abetting the difference in the level of where you are versus where they are. It's not really so much because you guys work at the same job, but they're getting assistance from their loved ones and you are not. So that's what I think we should strive for, you know what I mean, in the future, really being of assistance and help. So ultimately our grandchildren will benefit the most from it all, right? That's a goal of mine. So yeah. And this was a great piece of news. The Fed are holding rates, but indicate 3 rate cuts coming up this year, right? So that sent the stock market in a rally mode, right? Because investors, the institutional investors, are looking to see if interest rates will come down this year. It was already predicted last year, actually, that it was going to happen. So that's good. Let me tell you what you need to be ready for, because I put a video up for me in 2019 after the Feds had cut the rates pretty much almost to zero, that it was time to buy a house. I was saying it at that time, and now the pendulum has swung all the way to the other side. But when the rates are starting to come down a little bit, it's not really going to reflect or show in prices. I'm sorry, it's not really going to reflect and show in prices, because you got to realize, even right now, to buy a house, they're talking about over 7%, and like 4 years ago it was like at 2.5%. That's a huge move when it comes to percentages. So for it to reflect in prices, it's going to take it to be lower for a longer period of time than just when it happens at that moment. So once it can continue to get lower or stay at a lower tier, you will start to see that the prices will come down. But in the beginning, it's going to be more probably price going up, because what's going to happen is everybody's going to get excited that maybe interest rates are going back down to 5%, and the people that selling going to say, "Oh, y'all excited? Let's raise our prices." And last but not least, Reddit released their IPO last week. As I said, it started off, the IPO price was at $34. Obviously, if you wasn't an original investor in the IPO, you wasn't getting that price. By the time it hit the market, it was almost at $60, as I said it would be. So here's the thing. In the beginning, what happens is, let me break this down. So in the beginning, what happens is original investors make their money. That's the point of the whole IPO drop, because they was the ones that originally invested, or they invested earlier than us That's when it came before it came to the public market. They invested. So now this is their chance to make their money. They pretty much doubled their money. And they got out. A lot of them got out. Secondary now it's like secondary shares that's being put out there. And for you to get to the point where you're doubling your money, what's going to happen is they have to now show that they're making money. So a lot of times you're not going to see a big uptick in the price until after earnings release. They have to put out an earnings release showing, hey, we got good forward guidance and all cylinders are clicking with our company. That's what happened with ARM. When ARM came out with their earnings report, that thing went crazy. But before then, after when they dropped their IPO, it went up a little bit. Initial investors got their money, and then it did nothing. So just be careful between now and whenever they report their earnings. It might not do anything, and you'll get excited for no reason. But you can really, if they are doing great, the next 5 years can be a great thing for that company, and people can make a lot of money. Yeah, for sure, if they're doing great, because the earnings would tell that story, and forward guidance is always important when it comes to profiting in the stock market. Hey, that was your Money Market Monday. I hope that helped. DM me. Let me know if you need me, and we can put something together, and we could work, and we could do it. And I'm hoping this adds value and you make some money in the stock market. Let's win.